a black candle is one of the most consistent sentiment shift indicators you can find out there.
Welcome to MTA Live. Got Bryan Bottarelli here with me today. Chris Johnson. You can call me CJ or whatever you like. You know all the rules, but got an exciting session for you today. I think it's exciting. We're walking into, and I'd like to see more numbers. I've only seen one 9.8 and then a 9.7. I want to make sure everybody can hear us.
We'll just
right?
make it a 9. We'll just if you guys can hear us, if you guys can see us, if we look okay, if we sound okay, throw a 9 in the chat so we know that the technology is working and CJ can feel good about himself.
There they goes. Well, it's not about me feeling good for myself. It's about, it really was. People didn't want to hit the decimal point.
Yeah.
Now we know.
Right. Okay.
We've got an exciting session. We really do. We're going to talk a lot, as I've been telling you in the announcements, a lot about what I'm calling, and I think Bryan sees as a volatility trap, February seasonality. You can name it a bunch of things. However you look at it, it is a little bit of a warning that is worthy of us going through. We're going to go through that today. We're going to talk about a couple of signals you need to be watching as well. We are going to mention a couple of stocks towards the end. Bryan, I love the fact that you brought it up as a March Madness stock. So you're going to want to stick in until the end for that. And we'll answer some questions along the way. So got a lot to stick into this 1 hour segment. So I'm going to start rolling right into it out of the gate. Bryan, let's just start with seasonality. All right.
Yeah.
I'm going to come out of the gate strong here with the seasonality. I'll share a chart here with everybody. A lot of people look at October and they say, hey, October's the worst month of the year. It's the cardiac kid month of the year, right? It's not the worst. You've got other months. September statistically is the worst, right? But number 2, as I pull it up on the screen here, is February. Who would have thought? I mean, February's, we're all happy because we're into the new year, et cetera, et cetera. But when you look at this, you're down 0.5% on average. And this is over the last 20 years on the S&P 500. So you have to have some downside biases to have the averages negative over 20 years.
Yeah. So,
what do you see in this
so
chart?
Chris, just so people understand, over the last 20 years, the average return in the month of February on the S&P is a negative 0.5%. That's what we're looking at, right?
That's exactly it. So
here we are in the month of February. So it's clearly, one of these months where, and we can kind of get into this a little bit more, and we're seeing a lot of examples of this now. This is where people are kind of looking at their portfolios, looking at their holdings and thinking to themselves, like, are the winners from the previous year, the 2025 year, is that going to continue into the next year? Or do I need to take some profits? Do I need to seek some shelter, seek some safety positions before I make the decision to move back into the winners that were great in the previous year? So February, when I look at it, is one of those kind of reevaluation months. Okay, here's all the stuff that worked last year. It's starting to work, again in February, but we're now seeing signs of some caution, some apprehension. So it's really important here on the 11th of February to get a handle on how to approach this month so we can come out of it without showing a red bar and being actually in the green. And as traders, we're really equipped to do that. But I think it's really important to just set the baseline tone that we are in one of the worst historical months of the year. So there's real specific steps to take as a trader right now that can help you to turn a negative month into a positive month. And that's kind of what we're setting. That's what we want to get into today.
Yeah, absolutely. I mean, there's some things that people should watch. I mean, one of the things we see, and I'll bring up this next chart in February, is a little bit of volatility, right? You've got earnings, you've got a little lighter volume, right? Lighter volume markets are easier to push around. They can be bullied a bit, right? They're kind of a lack of events. If you look at it, when we look at January, like you said, I think everybody's celebrating a little bit. A couple of people pointed out in the chat, you got credit card bills from Christmas and such that maybe people are cashing in on, right? But
that is very true. The bills are coming due, and February is kind of like one of those digestion months. You scale back from a great year. I mean, we've been 3 years in a row of really strong returns, and people are enjoying that. The holidays are over. It's kind of reassessment time, and people are kind of shoving back, paying the bills, tightening up a little bit. And that's why you do see some amplified moves, because a lot of people are like, man, all these trades that worked, like I don't know how long they can last, so I might as well get a little bit safer here. And there's a bunch of examples of seeing that right now in the market, and they always, the saying, CJ, like, no one rings a bell at the top of the market or rings a bell at the bottom. But if you're watching it, there are some extremely clear signs that it's time to get a little bit cautious here. Red flags are being raised a lot of the time. And we just want to get, you guys, the viewer, we just want to bring these up to you so you could, make the best decisions you can and navigate through what's historically a really, really tricky, difficult month.
Right. Let me take a second and point out the poll that we've got up here, thanks to SP. Answer it real quickly. Is the AI trade still buyable on dips? Yes, no, depends on the day, and I have no clue. Pop your question up there because that has something to do with what we're going to talk about, what Bryan is kind of segueing us into, and that is sentiment, a little bit of what goes on with the market sentiment, whether it's people reassessing their portfolios at the end of the year, or whether it is, questions on what's going to happen. It really drives the sentiment. And that's what that poll is about. Bryan, if you could describe investor sentiment in just a couple of sentences right now in terms of current sentiment. We know what sentiment is, but what do you feel the sentiment is at this moment?
Well, in general, sentiment is always kind of one of those teeter-totter scales of risk on or risk off.
Hold it. You know what you just did there, right?
You did
6-7. Come on.
7.
Yeah. Come on. Yeah. Sorry.
Man, look at you.
Sorry.
You got to get off TikTok, dude.
Sorry. Go ahead though. It's a balancing beam.
So it's a balancing act, and when you see, the Microns or the Western Digitals or the Seagates of the world exploding higher, if you see the dip buyer stepping in to Nvidia, for example, that's a risk on market. People are willing to jump into high beta names, buy them on the dips because it's time to take risks, and the path of least resistance for a lot of these names is higher. So buy them on the dips and just let them keep going up. Well, when that sentiment then shifts, like I think we're seeing right now,
Right.
you kind of have the opposite side. You have stocks who are reporting what is appeared to be strong earnings. The stocks are gapping up, but then you're seeing people sell at those high levels, and you're seeing some pretty dramatic reversals. And to me, that is probably the number one sign that the market is telling you that we are now seeing a sentiment shift where what was perceived in the year 2025 as good earnings and would trigger big upside moves that were sustainable, now those same quote unquote good earnings are triggering gaps that are being sold into. So you're seeing a very, very clear sentiment shift. And we're going to give some examples of that throughout
Yeah,
this.
there's one that I mentioned to you, and I actually wrote about it a couple weeks ago, and that is one of the biggest sentiment stories of 2025. That's Palantir.
Yeah.
This was the stock that Wall Street hated, but retail investors and traders loved. And the company did all the right things. They were growing revenue, they were growing earnings, they were giving great guidance, doing all that stuff. But look at what happened here, and this is for everybody's benefit. This right here, that candle, that one day, that's when they came out with their most recent earnings. And when you notice this stock had already started to slip over, I call it a risk off type of move. We saw their highs way back here in November. But this one day, Bryan, I think that's exactly what you're talking about. It rallied, and then investors, instead of continuing to buy this huge dip, this shift in sentiment has now got us in this mode of maybe it's just a one day buy the dip. So is this, I think this really captures what you're talking about, right?
Yeah, and the fact that that candle is black, it's one of my, I've called it in the past the black candle of death, and it shows a clear, in my many years of experience trading, a black candle is one of the most consistent sentiment shift indicators you can find out there, right? So what's happening is Palantir gapped up, and there's no, if you look at that black candle, if you could circle that again
Right here.
yeah. There's no kind of like tail on that at all. So that tells me that the first trade of the day was the high of the day.
Right
Right.
there. Yep.
Right there. There's no kind of like, tail or head to that. So it gapped up and was immediately sold off,
Yep.
right? Even though good. And then you can clearly see what happened the next day and then the next day. And now we're in this kind of limbo period of risk off trading. So that is a really clear example of here's a stock that was just a rocket ship in
Oh,
2025 that is now seeing a sentiment shift in that black candle of death on earnings day, which previously would have spiked that thing, and triggered another move to retest highs, most certainly did not do that. And lo and behold, yeah, here we are in the month of
right.
February. So we're seeing that sentiment shift play out precisely as the historical trends dictate.
That is their earnings. Just for reference for everyone, that is back in August. And you got that spike up, but notice no black candle of death. We saw a
Mhm.
little rollover, and then everybody bought at that point, and it was off to the races again. That was the I mean, it was almost a carbon copy play every time Palantir came out with earnings. It was a fantastic run for this stock. I love the black candle of death too. I'm going to tell everybody, write that down if you got a piece of paper. Ryan always says, get a piece of paper and write down
Yeah,
notes.
right, right.
Write that down, the black candle of death, and just one more time so people can take that and apply it in moving forward.
Well, yeah,
Describe again one more time how they can see that on any chart, Brian.
yeah, I mean, you just go to stock charts and you use candlestick charting. A green, I'm sorry, one in your case, it's the white, candles. Those are upside days. The red candles are downside days, and
Yep.
then the black ones indicate when a stock gaps up and sets basically the high of the day, and then it closes down from there. And then if I mean, you can even go back to like, that high in mid October. There's like a black kind of like a spinning top, like to the right hand side. Go to the
Right
right a little
here.
bit more. Nope, nope, the black one. See the right at the top of yeah, right there at the top of
Yep.
the recent trend. So, and then, again, so they're just indicators that there is a possible sentiment shift happening. And they're always noteworthy to me because typically they are signs that the recent trend is becoming exhausted or coming to an end. And the recent earnings reaction on Palantir was very clearly illustrative of that shift happening.
So Palantir's one case, and I know you gave me another one, and this
Yeah,
would
and I
captures the whole idea that you can just see one a couple. Palantir was a few weeks ago, and the market changes. But go ahead, Brian.
no, like I knew that we were going to be going live today. So when I saw, and this is not a red candle, but it's an extremely powerful engulfing red candle that happened on Shopify. So Shopify had almost a similar situation with Palantir. They had great earnings, gapped up, right, and it immediately, right off the open, started to get selling pressure, and just look at that red engulfing
Right.
candlestick that we have today. That you cannot get a clearer example of the bears being in control of a hot momentum stock, even when they're reporting great numbers, than what we're seeing today. So when I see this is not like a one-off thing with Palantir. This is happening with a lot of names. Even just today, if you guys are home watching, type in Shopify and look at it. It's down, almost $11 right now. Consider where it was, at the open, right? So you're seeing a clear sentiment shift of going from risk on buying dips to selling the upside moves and seeing those reversals happen. And they're happening pretty immediately, and I think they're happening more and more regularly. So the trader's kind of mentality here is to step back from the risk on and take more positions of safety in this market, especially when we're seeing these types of reactions. So that's something that both Karim and myself have started to do inside the war room with our trades. And I just wanted to bring that to everyone's attention because until proven otherwise, I think we have to get a little bit more cautious and defensive when we see these types of market reactions.
Yeah, I love that VT in the chat has pointed out IBM, which is another one of those big companies like Palantir that did fantastic. And I assume VT might be Virginia Tech, and it should have been Hokie if it was, right? But anyhow,
You
there's
can put a suggestion in VT's suggestion box for him to change his
there
username.
you go. It's a little breadcrumb, but there is another one of what you've described, the black candle of death, right?
It is.
And now
Yep.
the company's coming down to its 200 days. So,
Yeah, and
Brian,
even if you go back to CJ to November, right?
Yep.
Like early, like right. There's another black one right at the absolute top of that upside trend.
Yep.
So reading these candlesticks, anyone can do it. Just go to stock charts, toggle down to candlestick charts, which I just had you do like right before we went on, and lo and behold, kind of like there they are. So
Yeah.
they're great examples of sentiment shifts happening in real time, and identifying them is a great way to get on the right side of a directional sentiment shift.
Yeah, let me get a little nerdy on everyone. When we talk about sentiment shift, we can also talk about volatility. And I pulled this chart together, and this is the volatility of volatility, I like to say. Just a standard deviation of the VIX. And when you talk about sentiment, you have to talk about the VIX. And volatility traps would be those points where the VIX gets really quiet. We always talk about the VIX peaking and spiking and all of that, and that being the perfect time to buy. But to go along with your message of everybody needs to be a little more aware of, call it situationally aware or market aware right now, the VIX is coming out of one of those quiet periods. And that goes along with the February calendar of, hey, if we're going to see some pullbacks and people stop buying the dips and people start selling those rips, the
Hmm.
VIX is going to start to pop up. I mean, if we
Yeah.
look at a normal chart of the VIX, which I can pull up here, eh, much the same, right?
Hmm.
I mean, now you're seeing a trend that's moving higher. And the last time we saw that VIX compress was back here in September, right before we saw that shot. So
That big
when you
spike.
put
Yeah.
together, yeah, when you put together the two, that is definitely a warning. Let's move on from the VIX because I think both of us can sit here and talk about this forever. Um, how do when we talk about Palantir,
Yeah.
and sentiment, you used a term and I've used it before, but when we talked a couple days ago, price to perfection. Do you want to explain that to everybody and the risks there?
Well, yeah, like when there's a situation where, a company comes out and reports earnings, and from the, outsider's view, everything is great. They beat the earnings, they raise their guidance, like everything that Wall Street wants to see. If all those boxes are checked, right, but the stock still trades lower, that is an indication that everything was priced to the absolute maximum of what it could done. All of those expectations, no matter how high they were currently priced in. And when you have one of those situations, like there's really nowhere for the stock to go but down. Like if you're beating on every metric and all of that was already priced in, and you raise for your next quarter and you raise for the year, and the stock still goes down, that stock was priced to perfection. And we got to that moment in Palantir. We probably could maybe get to that moment in a lot of other names that are coming up. So it's just something to be aware of, and that it's kind of one of those things I just want to let people know who are watching, is that when you have a situation like that, Wall Street really is like, it's all priced in anyway. So it's time to like take a step back, get the stock and moving down no matter what they report.
Yeah, I mean, it's interesting. I look at Shopify, which I'm glad you brought that to my attention. I hadn't watched them this morning. They had 31%, a little bit higher than last quarter in terms of their year over year earnings. They met expectations, the consensus from Wall Street. And when you look at their guidance, there's no guidance there. And that's what people need right now, right? Is some company to come out and say, we're going to knock the cover off the ball again next quarter. And if they don't do that now, they're just going to get punished, right?
Yeah.
Yeah.
So that's something to just, hear. If there's any month out of the year where these sort of reactions happen more frequently and more regularly, it's right now to start a new year, as everyone is reevaluating how they should position themselves.
Well, let's I'm not going to go back to the volatility chart because that probably bores people. That's a math nerd thing.
Yeah, get to the front, get fun charts.
Well, you will get to them in a second, but I mean, it is fun. One of the things that was in that chart is when we look at the volatility of the VIX. We saw less volatility if you look at the volatility of the S&P 500. And just so people know, there's a difference between implied volatility, which is what the VIX is based off of, and actual. Actual is looking back over the last 21 or 10 days or whatever and saying this is how choppy the market was. It wasn't choppy in January. We saw kind of a trading range. If I pull up that S&P 500 and look at the S&P 500 chart, and I'll do that as I'm saying this, but we saw a market that really was, I mean, dare I say, directionless. I mean, it looked like it was a situation where everybody's kind of taking a pause. I'll just pull up the spiders, the SPY. If you look
Yeah.
here in January, I mean,
Yeah, it's that's kind of a tight choppy range. There's not too much meat on that bone. You have to kind of be bottom ticking your bottom line there and top ticking the sell line. And even if you're doing that to perfection, there's really not too much there. So yeah, it was I think it was, a situation where investors and traders were coming off, 2 strong years on the S&P, and they were closing in on their third straight consecutive strong year. It was just January was just kind of like, we're going to ride this out and see if the party will continue. Will the punch bowl continue to be refilled again or not? It's a classic wait and see moment. And that's what we had there in January. And now, in my opinion, the answer to that question is starting to present itself here in February with the reactions that we just kind of highlighted in Palantir and Shopify.
yeah, somebody else just pointed out, I think it was SoFi, wasn't priced for perfection, but great earnings, and they're still tanking right now. So
Mhm.
it's happening all over the place. In January, I'll dig a little bit, and I always like to give everybody a pat on the back. You and Karim with this, I'm going to call it zero volatility, zero trend, or low volatility, zero trend, because we really do
Directionless,
flat. It
directionless,
is.
not committed trend. Okay.
And most traders hate that, but you guys kind of knocked the cover off the ball in the war room, right? And took advantage of not only closing out some of the longer term trades. And I don't want to get into we're not talking about people signing up for war room right now, but I'm trying to get into the mind of what you guys did and the fact that you've got uh, a great portfolio. And let's call it that. It's more of a portfolio approach because if people look here, you've got stocks that were closed out in January, puts that were closed out, calls, strangles, covered calls,
Yeah.
calls. I mean, you've got a little bit of everything here.
Yeah, it's a great kind of like, when you go to the buffet in Las Vegas, you don't wanna just get one thing. You wanna fill your plate with like 15 different things. And the same thing applies in this market. When you combine stock trades on good setups with put option trades on weak setups, also combined with call options and strangles and Karim's covered calls and even some call spreads. You put that all together, and if all of those are popping off, we had a fantastic month of January by trading using all of the tools in our trading arsenal, if that's what you want to call it, to really maximize every opportunity that we could. This is just a great example to show everyone out there, like what we do in the world. We're not 100% long. We're not 100% stock. We're not 100% strangle. We do calls, puts, stock plays, covered. We do it all, right? We every single, no pun intended, CJ, every single option that's available to us, we use. And when we have a month like we did in January, the results are fantastic and they speak for themselves.
Right. VT again is asking, and VT's got to put up if it really is Virginia Tech because it's going to burn me up before the. But what about quantums? Stick in here for a second because I do want to bug Bryan about risk on and risk off on the quantum question. But I'm going to throw something out of left field to you. Back to this though, and the mix is great, and everybody knows that precious metals. I mean, Krim and I got together and talked about, silver
Yeah.
and the risks that were there and the pullbacks. And when we did the 2026 outlook, I mean,
Hmm.
he nailed it. I mean, that
Yeah.
was amazing. So
Spot on.
I think everybody's thinking technology worked and precious metals worked.
Hmm.
And that's where I've been thinking. And when I took the liberty of breaking down the results of all the trades in January that were
Look at
closed
you
out.
getting so granular with us today.
I have to go and check, I got to check receipts a little bit here
Hmm.
before I start
Yep.
talking
Sure.
about this.
Yeah.
But precious metals, technology, and biotechnology are the things, the three areas where, and just so everybody understands this is the number of trades that were closed in the month of January by Krim and Bryan. And the majority of those, when you look at, or a large chunk of those, were right in those three sectors. Are those going to continue to get the blind benefit of investors, or does this sentiment shift start to? I mean, we've seen gold. If I pull up gold right now,
Yeah.
if I pull here, I'll just use the GLD. We won't go to the actual spot.
No, GLD is fine.
But if I go to the physical of gold today, or the price of gold today, it's up a little bit today, and that's because we're seeing a little uncertainty. But investors aren't buying the dip the way they did months ago, right?
Well,
Silver.
yeah, and if you blurt out SLV and you said this was GameStop from 2020, I would have believed it. I would have been like, yeah, that was like a meme stock like move. I've been trading this market for over half my life. I've never seen silver just go parabolic like that, right? So when moves like that happen and you have these rare situations where silver of all things just moons, right? There's a
Right.
great opportunity. A lot of people, go on CNBC and they're like, should I be buying silver? Right. A lot of people, at the bar are like, should I go buy some? I'm like, guys, like, that's not the question to ask. The question is, should we be shorting silver as it gives us this rare opportunity to just have trade put options at such a high level? And that's exactly what we did. Karim came out and gave you the warning when you guys were together. We did it in our 2026 forecast issue, and taking that warning to heart, I played Wheaton Precious Metals put options on 4 different occasions in the month of
Oh,
January, and all 4 of them were winners. So it's funny because everyone would have said, oh, you probably made money going long silver. No, we actually made money 4 out of 4 times going shorting that incredible upside rally. So the ability to take these big oversized moves and to trade them in both directions really gives option traders specifically like us such a huge advantage over everyone else who is just one, like, horse blinders going one way, right? As you all know, like, markets are a two-way street. Markets go up and down. So if you could time that and short those huge silver rallies, I mean, yeah, there's 4 trades on Wheaton Precious Metals ranging from 13 to 25%, and all of those came 0 days open. So same day gains 4 times in a row, 25, 28, 13, 14, combined with Karim's long-standing long plays on Seabridge, right?
right.
100%. That's the way to do it. That is the epitome of great trading, making a ton of money on the long side, and then also making money on a short-term basis playing the downside. We're winning no matter if metals are moving up or moving down. That's what we're going to continue to do. If gold and silver continue to be, up and down, that's great. The more they move, the better. So this is a great example of our precious metals January close trades. We have no intention of hopefully slowing down or changing our course now that we're
Right.
in February.
Yeah, I mean, this is kind of a display, and you stole my thunder, by the way, by going straight to the wheat and precious metals. But when you look at what happened there, and somebody said something about the landmines in January, but all of these were in the 26th, 27th, 28th, and 29th on wheat and precious metals. And there's an example of that longer term, that portfolio view, because these were stock positions that you guys took profits on in January as you started to see the tide turn.
Yeah.
Let me, and I think this is, they're great. I love looking back, looking forward. Let's
Yeah.
say January 12th, because we got an hour and a half left in today's trading session. So January 12th into the end of March. Do you think you still see that chop here? I mean, is this something?
January you mean February 12th?
I mean, February. I'm
Yeah.
sorry. My
See,
gosh.
you're still in your January haze as well, like the
Well, I
rest
don't
of
want to
us.
be in February. I know how bad February is. I'm trying to avoid it at all costs.
Yeah, right. Okay, say it. What was the question again?
So if we look at how well you guys traded towards the end of January and into February, and now we're
Okay.
at February 12th,
Yeah.
what
Okay.
should people, and somebody asked, is this time to be more protective about the portfolio? And that's where I'm going. I'd like to
Yeah.
know.
Absolutely, this is the time to be more protective and find more, what I like to call safe haven assets.
Mhm.
Krim and I have been dabbling in the healthcare and, a little bit of the biotech sector because I think there's still a lot of value in those names. Abbott Labs is one that I've specifically played as part of our January track record. I think it had one of its worst moves in 20 years. It had this huge, huge gap, and I love trading gift gaps. So there's a big $20 tradable move that is currently available in Abbott Labs. Yeah, see that? Okay, so look at that huge dip down, and then look at that gap fill on the way up. This is
Yep.
I mean, that could extend all the way back up to 120. And we're about a third of the way filling that gap. And so Abbott to me right now is kind of, this is one of the ones you can actually write down, guys. Here, I'll put it in the chat. ABT, right? Oh
Love it.
shoot, I
Love
put
it.
a line in there. What you have here is kind of like you have two, in my opinion, two really powerful triggers happening simultaneously. Just by and of itself, you have a gift gap that is filling. And what happens when a stock gaps lower like this? You have a huge gap. There's no longer any built-in resistance on that chart. So from all the way, yeah, all of that
So
that
you,
unfilled, from that bottom to that unfilled gap down, if the stock can move back up into that unfilled gap, there's no levels of preset resistance. So you could see it zoom, yeah, right back up to your line. So
yep.
that in and of itself is a great gift gap setup. But then you combine that with the fact that Abbott Labs is a healthcare safe haven play here in the month of February. It's kind of like all things line up for that. Just if you want to park some cash or some speculative trade capital for the month of February and withstand all of the chop and the nonsense. And like everyone can freak out about like, oh, the tech stocks are going down. What am I going to do? Well, Abbott is a great way just to kind of seek some safety, seek some shelter, and to have some outperformance, in my opinion, as just to get through the month of February.
Yeah. And if you look at the monthly chart, I just switch us over to a monthly of Abbott. I mean, this was a big pullback, but again, you're actually, if you look at it the other direction, you've got that 110 level and we gap down below it, but you've got some history at that particular price level in terms
Yeah,
of
and we're
resistance
starting
and
to see
support.
some buyers slip around at that level, and I
Yep.
think a lot of them are saying, "Hey, I'm gonna take some profits on NVIDIA, I'm gonna take some profits on Palantir, and I'm gonna move into something safe," and Abbott is where they're landing.
Yeah. You know what? The cubes I mentioned, and I just pulled this up because you just mentioned people are taking profits from some of those names. I mean, we've
Yeah.
seen Microsoft just get smoked, and
Yeah.
earnings you already mentioned the volatility that we've seen. Look at how Microsoft, if you compare it to what you just said about Abbott, we had this gap, and there was no washout. I mean, the
Yeah.
thing that stood out, and I hope people take this to mind. SP pointed out that you don't give out master classes on charting that often, so I'm kind of
Okay. Well, it's your lucky day because we got a little bit one today.
I'm trying to pull it here. So look at the volume down there, and it's just kind of that washout, which leaves, like you said, it's almost a vacuum for the stock to come up into now,
Yeah.
which is awesome. Whereas one of the biggest names out there that people love because of AI didn't see that same volume. They got it on that one day, and then no follow through, no nothing, and now
Well,
you've got
and people probably are wondering too. Oh, there's a gift gap in the Microsoft trade. Why wouldn't you trade that? Well, the key is you don't see any buyers pushing that stock back into that
right.
gap. You just saw an extended continuation move lower. So in order for me to trade a gift gap, I have to see not only the gap happen, but I have to see the stock start moving back up into that gap where there's no built-in resistance. It's happening perfectly, like you're illustrating here on Abbott. You're seeing it moving back up. That didn't happen on Microsoft. So that's the one kind of trigger to stay away from that. That's not a gift gap trade that you should be uh, participating in because it hasn't officially triggered yet as a legit gift gap fill move. Abbott has. So that's kind of like where a lot of people, kind of get the wrong impression and trade these improperly. They say, oh, anytime there's a gap, I'm just going to buy it because it's going to go back up. No, let the gap happen, but then let the market prove to you that that gap is then being filled. And, I've gone through this in multiple presentations, and there's a way to do that. We have a special gift gap scanner and trading technology and kind of like a methodology for how to do that. But essentially, you want to see 10% of that move kind of like start to buy back again. And that's your indicator that, okay, that gap is going to be in the process of being filled. But these are just kind of it's two good examples of Microsoft gap was not a gift gap trade. Abbott gapped and it was a confirmed trade. So the difference is pretty clear in those two charts.
Let me and I'll talk about at some point. I'll talk about War Room more in depth next month or something like that. And when you talk about gift gaps and trading them, one of the things I noticed in the tracks when you look, or the everything that was closed out, and I might be able to pull this up. I didn't want to pull this up because it might have been too granular because it was every single trade
Yeah.
from January. But when I look at this, you've got some calls that were traded on the GGLL, and I'm just going to throw out the ticker symbols, and you can tell people what they are. The
Yeah. So
GGLL, the PTIR,
yeah.
and also the TSLL, and each one of those were short little one-day trades. I'm looking at it and I'm just eyeball averaging it, maybe the back of the napkin here,
Yeah.
about 20%. I mean, 26%, 12 and 18. So
Yeah.
somewhere around 20.
So
What
so
are
all
those?
three so all three of those are kind of fun, unique new assets that essentially leverage the moves on Google, which is the GGLL, Tesla, and Palantir, right? So these assets are designed to move at a rate of 2 times the level of the stock price itself, right? So a 2% Google move would equate to a 4% up move in GGLL. And the cool thing about these assets is that they're not nearly as expensive as the underlying stock. So you get twice the leverage on the move for 1/10 of the cost that they would cost you to trade a regular call or put option. So one of my kind of new 2026 strategies was, instead of trading these high expensive Googles and Palantirs or whatever, trade these leveraged assets and see if we could participate at a 2x leverage rate on the regular stock moves. And again, those were one-day trades because I did see this sentiment shift happening, but it's just another kind of trading tool to add into the War Room's investing arsenal, because we constantly want to be adapting to market conditions, unless otherwise we're going to go obsolete. We're going to be we're not going to become relevant anymore. We don't want to do that. We always want to be adding new ideas, new methodologies. So that was one of the things that I highlighted in the 2026 forecast that I started trading in January. It worked for a while, and then as soon as I saw the kind of sentiment shift happening in February, I kind of backed off from that. But early on, it worked great. And if we cross the month of February, we get into March, April, and I see speculative risk on money coming back into the Teslas and the Googles and the Palantirs, those names could be back in play again.
And that probably goes more to also what you were just saying about, if we're seeing a sentiment shift, you don't want to really play those aggressive plays, because I noticed they're all long on the stocks, the underlying stocks, and they're leveraged. So it
Yeah.
really was kind of an opportunity to take care of or take advantage of what we would call maybe a moment of time. I'm dilly-dallying over here because I just wanted to pull it up so that people could actually see what I'm talking about,
Yeah.
and I figured out how to do it very quickly. There you go.
Okay.
So the three that I'm talking about are right in here,
Yeah.
and,
Right.
and they're all calls.
And it was early in the month of January, right? Like January 8th, yeah. So that about track. Yeah.
But here's the thing I noticed, and I'm sure most people they might go and look at the GGLL and say, all right, January 6th, according to this, is when you open and close that. Well, January 6th, according to the stock charts, is right here. And this red bar, this little
Okay.
tiny guy, you open something in one day, something to the naked eye, people might look at that and say, oh, it didn't move that much, but you still got a 26.5%. Is that just because of the leverage? Is it because of the call?
Yeah.
This was
It's probably the
truly,
combination of all three things. We probably we probably bought it at the absolute low. We
uh-huh.
used 2x leverage. We saw it up 20% in a day. We sold it, and then it retraced from the highs and closed to the naked eye would be an uneventful red candlestick day.
Yeah.
Even a trader who has the right timing and can get in, can turn what most look like an insignificant day on the chart, that could be a 20% move. So there you go.
I always say luck prefers a prepared trader. I mean, I learned that from my mentor, Prudential Securities, 30 some years ago. I don't want to go into
My
how long.
mentor said I'd rather be lucky than good
They
any
must have
day of
gone
the
to
week.
They must have had the same mentor because that's a
Yeah,
derivative of the same underlying
right.
message, right?
We're all taking the same "I wanna be lucky" underlying theme and just kinda tinkering it to their own little, unique profile.
That's right. Somebody just asked a great question. I'm trying to keep an eye on the chat so we
Yeah.
give some questions here. There are equivalents of these that are also bearish, correct?
Or I'm sure there are. You could play puts on, this is really getting nerdy. You could play puts on the 2x long leverage one too. So of
Right.
course puts go down or puts go up in value when the stock goes down. So when you have a 2x leverage play that's going down, a put option can work. So there's ways to play those leveraged ones in both directions.
Yeah, I mean, there are, and you could, and like I think it's PLTS is Palantir that is a leveraged short
Okay.
ETF.
Yep.
So yeah, I think you could step on the gas. I'm going to say just to make sure that I say it, man, if you are not familiar with trading these like Brian is, and you don't have the experience, that advanced experience options trading, make sure you watch and first of all, just join up with Brian. That there is my shameless plug.
There's a shameless
Just
plug, but yeah, like
yeah,
like 2x
but
leveraged assets are kinda like that's not options 101, that's options like mastery level, doctorate level
exactly.
kind of stuff. So,
You're gonna get your
basically
face ripped if
saying
you don't know what you're doing.
like if you've never traded some of these ultra leverage assets before, like let's not start learning calculus before we know how to do some addition, right?
That's exactly right. That's what I was trying to say. I mean, you're better off to kind of take a peek at what Brian and Karim are doing, then you're going to lose the same amount of money very quickly if you don't know what you're doing. Back to not being a shameless self promotion here, though. That would be looking at those type of ETFs. That could be a strategy that somebody might want to look at when we envelop your big message here, which is be careful over the next 2 weeks, 4 weeks, maybe even 6 weeks. I mean, if you,
Yeah. The big message here is exactly that. And if you are itching to buy something, I would really stress looking in, some safety assets, some healthcare assets, and Abbott would be one name that I feel pretty comfortable with going into right now, just to kind of like withstand the chop and the volatility and the sediment shift that we've historically seen over 20 years in the month of February. Like, why fight that uphill, that upstream current? Right?
yeah,
Why don't no one's going to be the hero and buy, Microsoft on a dip only to see a dip another like $50 in your face. Like what for what? Like sidestep that, let the moves happen, let the market flush out, let February happen, find some shelter from the storm, Bob Dylan reference, and there's ways to do that, whether it be, Karim's been talking about Kimberly Clark, KMB is a good one, they make diapers and toilet paper, like that. Those are things that these consumer cyclicals, discretionaries, whatever. Like there,
no,
that's the way to find safety in the midst of market sediment shifts. Um, Healthcare is another one. So that would be kind of the general message here. And if you need
yeah.
some safety just to like park some cash, let the February storm pass, I would be looking at those sectors.
Yeah, I just pulled up the chart of Procter and Gamble. A friend of mine works; he's an engineer for Procter and Gamble, and we went to dinner last week. And he did I may just buy because Procter and Gamble's going through the roof.
Mm.
P&G does not move like this, and I think this is a great example of those safety, those
Safe
sheltered.
safety coming in, like Tide detergent, right? Procter and Gamble's number one
That's
product,
right.
and like if you're going to cut your spending for the month of February, like you said, CJ, you're paying all your Christmas bills are coming in, right? You're
Right.
not taking detergent off of your grocery list that week.
There's your shopping list turns into your stock buying list.
Correct. Correct.
If you're going to Kroger, or as I say, many people who know me, I say the Kroger. If you're
Kroger.
going to the Kroger, take a look at your grocery list, and anybody who makes the stuff that you're buying every single week or month, that's the company that you start
Yep.
to look for in terms of
Yep. Yep.
consistency.
Yep.
Yeah. I want to get on to, and somebody pointed out, Rig is on the move. I hope you don't get upset. This is a little chicken wing
No, Rig's a takeover I think just Rig just was in the news and they were
Mhm.
acquired. I think they were getting acquired or they were the acquirer. I'm not sure the news, but this Rig is a news driven play from what I've seen.
I just backed it off on the XES. I wrote something about this a couple weeks ago, and people should be checking out the trade of the day if they're not. Open it up every single day and look at it because there's some gems in there. But both from Brian and Karim and Nate, everybody's got something in there that's good. XES has turned into a unrecognized leader. I mean, the energy service companies, your Halliburtons,
Yeah.
Transocean, which is rig, are going through the roof. I think it's a little bit geopolitical concerns. I think this is a weird because usually when the economy starts teetering, these are the
Yeah.
companies that go down because oil demand goes down as the economy. But this is really that thing where, as you said, biotechnology, you can find things, consumer discretionary. You got to look, but you can find them for sure.
Yeah.
Let's,
Go ahead. Go ahead. You're
I would,
transitioning. I was just real quick. I was just going to say there was just kind of this survey in the most recent Barron's, and it was I think they surveyed
okay.
like 300 wealthy families, family offices, and geopolitical concerns was the number one concern that they tracked from these wealthy families who participate in this survey. And I think when you see like that oil services play, that's kind of a reaction to that. Like as all of this oil and geopolitics comes in, the oil servers are going to be the companies who are going to service this oil that everyone's fighting over are going to be the eventual winners, and that chart reflects that.
Absolutely. All right. I am going to transition because we told people that we were going to get a couple stocks in or a little bit of
Yep.
an idea. And I think we've given them. I mean, I'm counting them right now. Abbott, we just mentioned Rig. You've mentioned a couple of
You
technology.
talked about the double longs, right? There's
Yep.
there's three of
Yep.
them right there. Those are great trades to like look at after we come out of February. If you want to play Tesla and Google and Palantir on the cheap, what better way to do it than a 2x leveraged long play? The all clear is not yet ready for those, but they're good ones to just have at the ready for when the market if the sentiment goes back to risk on. Those are great ones to move into.
I'm going to put you on the hook here. When we do start to get an all clear, I'm going to ask you to come back on one of the weekly
Fine, you
sessions
let me
so that
know.
we can cover it and we can flash a red light or a green light or something like that and make sure we
Only
let
if
people
someone was
know.
asking me, only if I could wear the Bears hat, though. Can I wear the Bears hat next time I'm back on?
I'm shocked that you don't have an IU hat. Where's your Signetti hat? I saw the Signetti
Oh,
T-shirt one
yeah,
day.
the Signetti shirt is in the wash, and my candy cane
Okay.
breakaway pants also in the wash because I wore them so much they just got filthy.
I don't want to see those for what it's worth.
Fine, I know your weakness now. I'm wearing them next time.
I'm in a bowling league just for fun. It's a bunch of old guys that get together and just tell stories while we're watching everybody bowl. And one of the guys there is a IU graduate, and I
Mm,
had to wear a Signetti T-shirt
nice, nice.
since that game because I'm
I'm
an
sure
Ohio
he's the
State
most
guy.
successful, wealthy, engaging guy in all your bowling league.
He's a restaurant owner, so he struggles, but he's very successful. So let's talk about Signetti, IU. Miami University basketball is one of the biggest shows in the NCAA right now, just 45 minutes up the road here. But March Madness is coming, and I know you've got a ticker. I'm teasing everybody here. I want to
Yeah,
give
it's
them one more idea and run them through it.
all right. So if anyone watched the Super Bowl, I'm sure many of you have, and we're not going to get into any of the conversation about the halftime. We're going to talk about the actual game itself, right? I think there was how many $1 billion was bet on the Super Bowl, and everyone with the DraftKings, or app on their phone threw a bunch of crazy parlays in, anytime touchdown scorer combined with over 100 yards receiving combined with over 2.5 sacks. If you watch 3/4 of that Super Bowl, I don't think hardly any of these prop bets hit, right? Like
No,
touchdown scores were like some crazy tight end, a defensive touchdown, right? Like Kenneth Walker was probably the only player who maybe hit their prop metrics, but when you combine that with all this other stuff, I don't think of that. I don't think a lot of that hit. And I wrote about this in Trade of the Day earlier this week. I think the biggest winner from this Super Bowl is going to be DraftKings. DKNG is the ticker. It's down about 85 cents today. It's trading at a pretty low value, and I think they have earnings coming up, so we have to be a little bit careful here. I mean, I like that. I like that double bottom that's happening, right? DraftKings is about to report earnings, so there could be some volatility in that. However, I think DraftKings is positioned really well because they won the Super Bowl by not having to pay out all of these prop bets that didn't hit, combined, CJ, with the fact that we are about to flip the calendar over to March. March Madness in NCAA is one of the most, besides the Super Bowl, is one of the most heavily bet time periods of the year. So DraftKings is coming off a monster win in the Super Bowl, and then they're also rolling right into March in NCAA basketball. So I think they're setting up for a really, really solid Q1 of 2026 and beyond. Dabbling a little bit in DraftKings at these levels makes a lot of sense to me.
I'm trying to get that chart up. There's some sort of weird technology thing going on. There it is.
See it?
DraftKings.
You got it.
Yep, there you go. And you're right, down 3% today. But I love the idea that so part of the earnings surprise here could be that they didn't have to pay. Nobody had 9 total points in any way, shape, or form at the halftime, let alone the ending score.
Yeah, I
So
mean,
they're
like, field
they
goal
get to get
kicker was the MVP of the first half. Like, how much more boring of a game can you get than that? So I know when I'm watching a game like that's what's kind of going through my mind. Like, man, like all these prop bets are not hitting. DraftKings is probably just ringing the register. They're dancing all the way to the bank on an uneventful, 3 quarters of football. And yes, the fourth quarter did pick up, but by that time, it's too late to kind of catch up to any of these metrics on these prop bets. And the majority of prop bettors are always betting the over. Like, there's probably not 1 in 10 people who bet the under on any of these things. So I just think whether the Super Bowl will be reflected in DraftKings upcoming earnings or not, I don't know. But I think at these levels, with the Super Bowl success combined with the coming NCAA basketball tournament, I think they're setting up for a really, really strong Q1.
That's fantastic. I love the play. And it's kind of when you look at that in Penn National, which is,
Yeah, you kept bringing up Penn. You like that one too. So that's another one that could be in play. Well,
well, I like Penn. It's a little bit of a longer story, and I'll just share it real quickly with everybody. All the same reason that you just brought up, Brian. But when you look at Penn National, they partnered up with ESPN, and I don't know if you saw, but now they're talking about maybe changing up. Disney may start broadcasting
yeah,
some of the
big.
NFL games, and Penn National's in there with Disney. I can bet, and I don't bet often. And when I do, I bet responsibly, but I can bet at the Kroger store right down the hill. They've got a kiosk that
Oh, really?
is
There's a kiosk at
there's
Kroger?
a kiosk.
Holy
I've got
cow.
for like 6 months, they kept telling us it was coming on the screen where you check yourself out. And if you
Yeah.
use your Kroger Plus card, you get bonus points. And then all of a sudden, one day, there was a kiosk right there at the Kroger, and there was somebody there explaining how to use it. So betting is coming mainstream. We saw that rush, obviously, after the pandemic.
Yeah.
But man, if Disney's getting into the betting game, you
Right.
can bet
Right.
that DraftKings and Penn National are going to be a couple companies to watch. I mean,
Yeah. Next thing you know, grandma's going to be putting 250 on money line, the Hurricanes money line, instead of buying her lotto scratcher on the way out.
let's be honest, Grandma was probably betting the whole time. We just didn't know it.
Joke's on us. Grandma's been pounding the bookie for all these years unbeknownst to anyone.
That's right. That is exactly right. All right, you got any closing words? I think I can wrap up the session by saying protect yourself, protect yourself, protect yourself. Do you think is there any time frame that you would look at, Brian, and say, hey, without who knows what's going to happen, but I always look at seasonality, and typically April and May start to turn into better months. Is there
Yeah,
anything you've got around to watch right now?
I think the huge takeaway here is to just be very protective in the month of February. Always have that powder dry for
Mhm.
when it's time to move back in to the market. There's time to make money in the market. There's time to just accumulate cash and to not lose money. And right now is one of those, just tread water, get through it, seek safety, see how we come out of March, or how we come out of February, how we roll into March, and then make some allocation decisions at that point.
Okay. Okay. Everybody take those wide. Why can't I say it?
Wise
Wise
words? Is that
words.
what you're trying to say?
take that sage advice from Bryan Bottarelli. Bryan, I'm going to look forward to having you on next time.
Yeah.
And we'll keep updating everybody, obviously, either through the trade of the day. Make sure you're checking that, and just through here, MTA Live and your daily sessions. Obviously, get some information if you like it about the war room. It's
Yeah,
definitely worth a look, and I'll talk about it next month.
I always appreciate kind of, taking the trading that we're doing in our services and coming on live and talking to someone like yourself, CJ, who knows what the heck they're talking about and can pull up charts, and we could do some analysis in real time. And this is fun for me. So whenever
Great.
you want myself back, or Karim back, or Nate back, or JC Parrots, or any of the guys that we have in our network of traders, man, let me know. And I love sharing this with you guys who are watching at home. So thanks for jumping on with us. Hope you had some good takeaways. That stay safe in the month of February, and then when it's time to hit it again, like we did in January, we'll be ready to crush it. So
Jumping
that's
right on
that's
it.
my parting words.
All right. That's it, guys. We'll see you next time. And as always, I wish you the best trading success. Have a great day.
See you guys.